Welcome to the Explainer. So, if you've been keeping an eye on the tech sector this month, you've probably noticed something huge shifting right under our feet. For years, we've been talking about the AI future in these abstract, sky-high terms. But May 2026, this is the month where those promises are finally getting a very real, massive, multi-billion-dollar price tag. We are literally watching the collision of hardware scale, consumer software integration, and corporate governance all happening at the exact same time. It's a fascinating moment, and we've got the data to break the whole shebang down for you. Okay, let's dive into this. $95 billion. That is the jaw-dropping market cap Wall Street just slapped on a single chip maker, Cerebras Systems, during its NASDAQ debut on Thursday. To put that into perspective, they sold 30 million shares and raised over $5.5 billion. That makes this the single largest U.S. tech IPO since Uber all the way back in 2019. Shares opened at $350, which is a massive jump from their $185 IPO price. And yeah, it saw a standard 10% first-day pop correction on Friday, but the sheer scale of this debut is just undeniable. This is the opening act of a massive AI IPO wave, and the public markets, they are hungry. So to make sense of that $95 billion valuation, we're going to connect the dots across three interconnected arenas today. First up, we'll look at the infrastructure bet. Next, the consumer pivot. And finally, a real governance reckoning. All right, let's start with part one, the infrastructure bet, which is really the hardware foundation making all of this possible. Looking at the actual business behind this debut, Cerebras' revenue surged from $290 million in 2024 to $510 million in 2025. I mean, that is an explosive 76% year-over-year revenue growth. What's driving that? Well, they saw 69% growth in hardware and a massive 99% growth in their cloud services. But you also have to factor in the costs. The company reported an operating loss of $145 million in 2025, heavily driven by their huge R&D investments. So when the market gives a company with $510 million in revenue and a nine-figure operating loss a $95 billion valuation, it tells us something absolutely clear. Wall Street is confidently pricing in a future that hasn't even fully arrived yet. And this brilliantly illustrates exactly why the market is so hyped. Cerebras technology is genuinely differentiated. Their flagship AI processor, the Wafer-Scale Engine 3, is the world's largest commercialized AI processor. It's literally 58 times larger than a leading GPU chip. It's like a giant puzzle piece. Because of that, it delivers inference speeds, which is basically how fast the AI spits out an answer when you ask it something, up to 15 times faster than traditional GPU setups. And it does all of this using a fraction of the power per unit of compute. In an industry where electricity and speed are your biggest bottlenecks, this hardware is an absolute structural game changer. Now, what's really interesting about this slide is the hidden financial reality that almost derailed this entire IPO. Cerebras actually had to withdraw its IPO filing in late 2025 because regulators were heavily scrutinizing their customer concentration risk. They were heavily reliant on just a few customers in the UAE. In 2024, a single client, G42, accounted for a whopping 85% of their revenue. Now, in their refresh perspectives, G42 is down to 24%, which sounds great, right? But now, the Mohammed bin Zayed University of Artificial Intelligence represents 62%. So the risk of relying on just a tiny handful of clients, that is still very real. So you might be wondering, how did they overcome that customer concentration risk to actually go public successfully? Well, they landed a staggering $20 billion compute deal with OpenAI in January. That served as the ultimate diversification anchor to finally get this offering over the finish line. But here is the wild twist. OpenAI president Greg Brockman holds a personal stake in Cerebras. This was actually highlighted repeatedly during his cross-examination at the ongoing trial just last week. That incredible triangle of relationships, OpenAI, Cerebras, and Brockman, literally bridges the NASDAQ trading floor directly to a federal courthouse. Let's move to and see how this builds into part two, the consumer pivot, which is arriving hot and fast at Google I/O 2026. See, Google isn't just updating their software. They are trying to conquer absolutely every screen you own. The expectations are running incredibly high across every single product line right now, mostly because Google is looking to address everything simultaneously to close the gap with their competitors. We're expecting a massive update to the Gemini model to rival the GPT 5.5 class. Then there's the Android XR smart glasses for your face, the highly anticipated Illuminating OS desktop system, and Google Books, a totally new category of premium Android-powered laptops with Gemini baked right in for your lap. It is a relentless, rapid-fire slate of consumer integration. So the crucial point is this existential question about Google's core business. Will AI mode become the new default for search? Think about it. If Google's AI overviews fully replace traditional links and become the standard, it doesn't just change how you look up a recipe or read the news. It fundamentally rewires the entire internet economy for the thousands of publishers and websites out there who rely on your web traffic to survive. This isn't just a fun new tech update. It is a potential rewiring of how the web actually functions. Which naturally brings us to part 3, the governance reckoning and the Musk versus Altman trial. Over in the Oakland courthouse, the advisory jury begins their deliberations on Monday, and I just want you to look at the sheer weight of the evidence they are dragging into that room. Over 3 weeks and 2 days of intense testimony, they have reviewed the Sutskever dossier, the Allegiance email, the Zillis texts, Brockman's personal journals, and the absolute confirmation that ChatGPT was launched without board knowledge. 9 jurors, 6 women, and 3 men have heard from an absolute who's who of the industry, from Sam Altman and Ilya Sutskever to Satya Nadella and Brett Taylor. They are literally establishing a permanent historical record of the most chaotic days in AI history. But despite all of that courtroom drama, the actual legal scope here is surprisingly constrained. Remember the fraud claims? Those were dismissed before opening arguments even began. What remains is a very, very narrow legal question. Did a charitable trust exist back in 2015, and was it violated, leading to unjust enrichment? Legal analysts widely consider Musk's case to be pretty weak on these remaining claims, simply because they require a highly precise legal finding that's incredibly difficult to extract from the evidence. In fact, most analysts expect literally $0 to actually change hands when Judge Gonzalez-Rogers ultimately decides the remedies. And that brings us to a quote from technology writer Aaron Rose that I think perfectly captures why this trial matters so much, regardless of the final verdict. He wrote, "The record is permanent. The characters have been drawn. The accounting belongs to history. This trial was never really about a financial payout. The jury's finding is purely advisory anyway. But this entire process shapes the public narrative around OpenAI's governance, right as they head toward their own inevitable S1 filing to go public. The trial is the crucible where the foundational myths of the AI industry are being stress-tested for the whole world to see." And hey, while the IPOs pop, the keynote stream, and the juries deliberate, the relentless pace of the broader industry hasn't paused for a single second. Just running in the background this week alone, Anthropic is in the final stages of a funding round valuing them at $950 billion. GitHub Copilot is shifting to token-based billing on June 1st, and models like DeepSeek View 4 Pro are already live, completely pushing the boundaries of what open-weight, downloadable AI systems can do. The machine just keeps moving forward. Which leaves us with the ultimate question as we wrap up today's explainer. You have the $95 billion infrastructure bet of Cerebras. You have the massive consumer software pivot happening over at Google. And you have the governance reckoning of OpenAI playing out in court. Looking at all of this together, is the market making a completely rational bet on an inevitable AI build-out that's going to change human history? Or are we just repeating a very familiar tech bubble pattern from previous technological waves? The answer, as history so often shows us, is probably a little bit of both. Thank you so much for joining me today. Keep asking questions, keep looking at the data, and I'll catch you in the next explainer.